السلام عليكم ورحمة الله وبركاته. الحمد لله رب العالمين والصلاة والسلام على النبي الأمين وعلى آله وصحبه أجمعين. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقه قولي آمين. Dear brothers and sisters, inshallah today I'll talk about some recent developments in wealth management service. What the latest developments in the wealth management services, and we also talk about the some issues in wealth management service like sustainable investment and sustainable return. So first, let's generally the wealth management service are provided by a small or large scale wealth management company. They may call themselves sometimes as financial consultancy or financial advisory. So most of the wealth management services providers, they will call themselves financial consultancy or financial advisory, and they are usually small companies and they have a few employees, and they will give this service uh, wealth management, including tax planning, investment, and others. So, investment banks mostly provide wealth management services to corporate clients. So, investment banks usually they are the sister banks with the mainstream banks like for example, Bank they have Investment Bank, or uh, Maybank, they also have Maybank Investment. So these banks, they are also providing wealth management services, um, mostly the investment services, but they are mostly for the corporate clients. And some investment companies like mutual funds, they only provide services for investment. They help to invest, but they do not provide any other wealth management services. Now, commercial banks may provide wealth management services under their private banking scheme. So this private banking scheme is a new development, and the commercial bank, the mainstream banks, they provide private banking service to high net worth individuals. So what is this private banking? So private banking is a suite of services offered by a bank to high net worth individuals designed to grow wealth. Most of these wealth management strategies in banking and investment are reserved for high net worth individuals with at least 250,000 US dollar in assets. So this private banking is a one-to-one service to high net worth individuals, and it is a suite. It is a basket of services provided. It includes tax planning, investment, will writing, and all others. So all of these provided by this private banking service, and with one-to-one, there will be one person in charge to give service. So it includes a wide range of wealth management services and all provided under one roof, under the same company. Services include investing and portfolio management, tax services, insurance, and trust and estate planning. So we can see a number of items, all uh, under the wealth management are provided under the private banking. An assigned personal banker coordinates all the high net worth individuals' financial activities. So we can see they are very the smooth service, and it's a very uh, famous right now, the private banking service to the whole high net worth individuals, because they can provide all under the one umbrella. So these are the benefits of private banking. There is a privacy because it is a one-to-one service. So there is a privacy, and because it's under one bank. So it's and with the employee is taking care of one person, so there's a privacy. It is a one-to-one service comparing with some other companies. They like big investment companies, they do not give one-to-one service. And discounted service because they give all the services under one umbrella, so they can provide some discounts. And of course they have high returns because uh, the investors, they can minimize their costs. At the same time, there are some cons or disadvantages of this private banking. Some less institutional expertise because they are providing all the services under one umbrella. So they do not have expertise in certain field. For example, uh, private banking may not have a good investment managers, or they may not have a good will writing because they are giving everything in under one. And they have options limited to proprietary products. So this is a very disadvantage, is that the when this private banking, they are offering different types of products, so all are actually their own products. So when someone wants to invest, they will offer their own products or some. So that is the disadvantage, means they will not offer someone else's product. And high staff turnover. Most most banks, they have a very high staff turnover. People are always coming in and going out. So where there is a new person, so he has to look again on the client's background, the previous history of investment and future. So that is not good. While one employee was taking care of one customer. And then there is a possible conflict of interest for employees, because when they are giving this service, and they may not choose some other banks products or services, and when there are also turnover different person coming in, so they may have a different choice, or they may have a different opinions on the investment. So these are the list of the top private banking. So we can see uh, Raymond James, Credit Suisse, BNP Paribas, Citigroup, Goldman Sachs, HSBC, Richardson Bank, all are the big names in global private banking. So now, with the private banking, there is also popular development in wealth management services, which are the financial planning tools. So these are the more sophisticated financial planning tools are emerging to serve the clients. With these tools, investment advisors can provide year by year projections of how investment allocation should evolve over time to reflect anticipated changes in life circumstances. So these are the online tools, and most of them are free. So these are so easy and so smooth, and someone can just go to these websites and they can just answer some questions. They can tell them what is their plan, and the software will calculate, and the software will provide suggestion for saving, and how much he should save in order to reach to certain goal of investment for retirement. Okay, one of them that I can share with you is the ESP Planner. It is the top financial planning tool in the US. So it will provide you your planning for your retirement, for your investment, and others. Once you log in, you register, and you need to just answer a few questions. So you need to tell them your goals, your investment goals, your income. So they will tell you your how you need to do your budget, how much you should save in order to reach your goals, which type of investment you should choose, and all of this will be done very fast and through the software. And this is the most popular planner, and this is also mostly free, but they also have charge for exclusive service, but the basic one is free. And then with that financial planning tools, also there are some financial planning software. And this software is mostly used by the financial planner in order it helps them to get data easily, especially calculation and planning. So these financial software programs typically provide historical data, the ability to directly compare two investments, and visually represent the comparison in a way that is easy for the client to grasp, and a variety of equity evaluation formulas for stocks, including risk and volatility measures. So these softwares are very smooth and very easy to understand. So this software will help the financial planners to calculate and to plan and to use different calculation method. As we learned for equity calculation, there are different methods. So they will calculate and they will show in a very simple way, which is very easy for the client to understand. And these are the some of the common software that is used that you can try, like Money Guide Pro, eMoney, Ringgit Capital. So they will do very fast calculation on retirement planning and investment uh, planning and some this. Okay, so now after we have known the developments in terms of the technology, there is a new issue also in investment or wealth management service, which is sustainable return on investment. While with the new latest the development goal of United Nations, there is a call worldwide that we need to invest on something which is not harmful for the environment, for the society, and also on the economy. So there is concept is called sustainable investment or ethical investment. So it is ethical investment is investment which is not harmful for the environment, for the society at large, and also um, it is sustainable. So sustainable return on investment is a methodology for identifying and quantifying environmental, societal, and economic impacts on investment in projects and initiatives. So this is a tool that will measure the impact, the social impact or the environmental impact of an investment. How this so the return is only not the monetary return that we can calculate, rather also the return, other return. Especially if we invest, right now we have um, Ethis crowd. It is a very good platform for social investment. So they are investing in Indonesia, for example, to build some house uh, for those for the those who have lower income. So that is okay. There is a return from monetary return, but at that time there is also a social return from that investment. So that also adds a value to the investors. So this the sustainable return on investment is a fundamental principle, is the creation of monetized model of non-cash benefit and cost. So it's a method, it's a tool that will see the return based on is a non-monetized. So the return is they will see the benefit and also, is other which is the good for the environment, and the cost is which are the bad for the environment. So what are the benefits in based on this tool? Like if the emissions are avoided, the resources saved, improvement in health and productivity, people's health. So there will be a point for that plus points. But if this investment has adverse effect on public health, it is has a risk with um, from the associated with the rising cost for resources or disposal, means there is a risk on health or environment, or impact of a project on nearby farms, fisheries, or tourism sites. So all these impacts, it has a cost, so that they will give a negative marks. So with that, they will calculate whether this investment is a good investment or not. So this socially, so why many can ask why sustainable investments is important, because this investment strategy is growing. It's not only for the Muslim, but for the even in the not in the Muslim, by the non-Muslim countries, they took this initiative, and it is growing more than 100% annually since 2012, and currently accounts for 18% of the assets under management. And research has shown that companies are more profitable in the medium to long term when they adopt this investment strategy. So that it means that even though in short term we may not see the return, but in the long term or in the medium term there is a higher return if we consider the impact on the environment, on people's health, and we can see also this sustainable investment is in line with the Sharia, because it also if we look at the maqasid sharia, that the maqasid sharia tells us we need to protect the environment, we need to protect our life, our future generation. So that actually goes in line with the objectives of sustainable investment, that takes care of our environment, of our life, our future, and also our society. So we can see here the why this with this chart, it shows the proportion of global socially responsible investment assets from 2016 to 20, and we can see that in 2020 the global socially responsible investment was USD 35 trillion, which is almost one third of the whole, or half of the whole investment, which was in 2016 it was 22 trillion, then in 2018 it was 30 trillion, and 2020 is 35 trillion. So how fast it is growing. The top countries are the United States. In 2020 they had a 70 trillion investment in ethical investment, and second is in European countries, they had 12 trillion investment in socially responsible investment. So people are talking about socially responsible investment because it is people are thinking about the future generation, the climate change, the protection of the environment, and also the investing in renewable energy, where that is not having a bad impact on the environment. So in Malaysia, this socially responsible or sustainable investment is also approved and encouraged. Islamic funds are also recognized as sustainable investment, as Sharia principles promote the pursuit of positive social outcomes. So Sharia compliant investment goes in line with the ethical investment or socially responsible investment, because it also talks about maqasid sharia, and what sharia prohibits also goes in line with the socially responsible investment. The government of Malaysia propagated sustainability as a national agenda, and in 2015 the Khazanah National Berhad, they issued the first socially responsible sukuk, which is called SRI sukuk, of 100 million. So it was a sukuk that will have a positive impact on the environment, and it was and also a positive impact on the society. So that was the first initiative. And then in 2014, Bursa Malaysia and FTSE introduced the first exchange index to track sustainable and responsible investment in Asia. It's called the FTSE for Good Bursa Malaysia Index. So index is actually a measurement, or is a like we can say is a database to track the changes or development of socially responsible investment in Asia. So this is an index. They tracks the overall development changes and addition in socially responsible investment in Asia. So there has also been a revival of interest in waqf, which is social development and public good objectives. So if we look into waqf, as we see in Islam, in Sharia or in Islamic finance, we have a lot of innovative instrument and which is in line with the ethical objectives. One of them is waqf. So we also have recently waqf sukuk, which is sustainable, which has a social development goal that the sukuk is issued for the development of the society, of something beneficial for the mass, for the public. So this waqf is one of the instrument of Islamic social finance that also goes in line with the sustainable uh, and responsible investment. And many the research have been done where they conclude that socially responsible investment goes in line with the Sharia compliant investment. So when there is a Sharia compliant screening that can be actually combined with Islam, with the ethical screening. Recently, we have one investment platform is called uh, Wahid that can combine both the Sharia compliant investment with the ethical investment. So that is a new innovation. So that's all on this topic. So with that, I thank you. Assalamu alaikum wa rahmatullahi wa